Good day, this is your European Open briefing for Thursday, 15th of September. My name is Michael Florentiades. I am the Chief Economist here at xm.com. These are the key points you should know about today. The pound is volatile ahead of the Bank of England decision later today. The yen remains bid as markets are in a bit of risk-off mood. Oil also slipped below $44 a barrel, perhaps weighing on risk sentiment too. Australian employment report overall weak. New Zealand GDP also missed estimates. And in the calendar today, the main events, we have a lot of events, but the main events are from the UK, which is retail sales and Bank of England, and then later from the US retail sales as well, and then industrial output. On to dollar yen. The US dollar's attempt to scale 103 has failed for now. It's around 102.50. So the focus starts to turn on next week's Fed and Bank of Japan meetings. And there are some worries that central banks have reached the limits of what they could do. And this is keeping bond yields supported for now. And as the article showed yesterday, the Nikkei article, there is a lot of speculation about what the Bank of Japan will or won't do next week. That is obviously having an effect on the yen. On to the Aussie, we see it pinned near 74.50 versus the US dollar. The Australian employment report was somewhat disappointing. Yes, the unemployment rate fell, but the participation rate, the labor participation rate also fell. Underemployment in the economy rose, and the number of full-time positions contracted instead of posting modest growth. So this did not provide much help for the troubled Aussie, which has been under pressure. Perhaps negative risk sentiment and pressure on commodities is also weighing on the Aussie. And the oil in the United States, the US contract fell below $44 a barrel yesterday, following Energy Information Agency inventory data that showed a large build in distillate stocks. On to the UK pound. The pound is trying to steady after some losses yesterday, after testing the 31.40 level. The Bank of England is expected to hold rates and cut them again close to zero, probably in November. Now, recent UK data have led to some optimism that the country will narrowly avoid a recession during the second half of the year in the aftermath of Brexit. That would be an accomplishment for the UK economy. Still, business investment and hiring plans could be postponed until we get some Brexit details about what's going to actually happen and what a new relationship between the UK and the EU will be. On to the calendar, you see the Kiwi GDP, New Zealand's GDP, missed estimates. It came in 0.9% from 1.1% expected. We had a little improvement in Reuters Tankan survey. From 1 it went up to 5. On to the Australian employment numbers, you see there was expectation employment to grow by 15,000. It actually fell by 3,900. And the participation rate fell from 64.9% the previous month to 64.7%, which is quite a negative development actually. Yes, the unemployment rate fell by 0.1% to 5.6%, but this might be due to the drop in the participation rate. We also had the Swiss National Bank meeting. It kept interest rates unchanged as expected. The SNB also sees a significantly overvalued Swiss franc, which is also no surprise. Swedish unemployment surprised a bit on the upside, and retail sales expected to dip in August, 0.4%, but remain a relatively robust 5% plus gain when we do a year-on-year comparison. We have final Eurozone inflation, not much revision is expected, and then we have the Bank of England vote at 1100 GMT. So the actual vote, it's expected to be unanimous. So everyone is expected to vote to keep rates unchanged, wait for more data perhaps. On to the US session, we have US current account numbers, initial jobless claims, and we also have the Philly Fed business index. If we get a surprise there, these figures might have an impact on the market. We have producer prices and then retail sales, which are very key to gauge the health of the US consumer. The headline number is expected to drop slightly by 0.1%, but ex autos and the control, which excludes a number of volatile components, is expected to grow 0.2 and 0.3% respectively. So a lot of interest on US retail sales. Finally, we're going to get industrial output down by 0.3% for the month, and also capacity utilization falling a little bit from 75.9% to 75.7%. So all in all, it's expected to be a very busy day. You see, tomorrow we're getting US inflation, some peak of what's up for tomorrow, but today plenty of things to keep the market occupied. Thank you very much for watching and have a great day.